This is Jay Martin.
Want to talk to the money manager, Brent Johnson, and
Yeah,
say, where are you looking for opportunity right now? Where are you
sure.
looking in terms of, safe haven assets? I had Jim
Yeah,
Rogers on the show yesterday. He said he's sitting on the largest percentage of US dollars relative to his
yeah,
portfolio than he ever has before. And it's really for lack of a better idea.
yeah,
He started trickling a little bit of money into like Uzbekistan equities for because he's just
yeah,
looking for stuff.
yeah.
What are you seeing out there, Brent? What's catching your attention?
Well, I think the last time I was on here, I don't know if this was 6 months ago or a year ago. I think in general, just as a simple way to just kind of survive, again, I think the biggest goal right now is survive and advance. Right? Everybody, of course, wants to get rich. Everybody wants to hit the home run. But the most important thing right now is just survive and advance. And this is the most uncertain time. I've been doing this for almost 25 years. It is far and away the most uncertain time I've ever been through. So if you are certain, kind of check your certainty. And so one of the things I have said is if you're just trying to get through the next 3, 4, 5 years, put 25% of your money in cash, 25% in US equities, 25% in gold, and 25% in real estate. And I believe that if you have that, I think you will survive, and then you can reassess and move on from there. That said, right now, I think I would have more than 25% in cash. Or if you don't have 25% in cash, if you have your money in equities or some kind of risk assets, if you can hedge them in some way, I would hedge those. If you have fixed income, I would probably, I know a lot of people who are very bullish on bonds now that they've fallen a lot. And they're going way out on the curve because I think we're going to have a recession. I'm not doing that. I would have some exposure to fixed income, but I would have it short term because I don't know if rates are going to go up or down. And I think everybody should own gold. Gold is, down $100 in the last week or so or a month. So I think owning gold is good. Now, that's in general what I think people should do. But in the very short term, I think things are going to get worse through the end of the year. I think in general, risk assets are going to be lower than they are now. So we've owned equities for years. The equities I own are mostly hedged, not 100% hedged, but very hedged. We're going to get a few bear market rallies, and bear market rallies are always the strongest and the hardest. But I think by the end of the year or even into first quarter, equity prices are probably lower than they are now. Now, having said that, if you sold a couple of years ago and you're sitting on a pile of cash and you don't have any exposure right now, there's a lot of equities that are down anywhere from 25 to 50%. You should probably start buying some, right? I mean, because you're probably not going to time it perfectly. So if you're 100% in cash and you put 10% into US equities now that they're down 25, 30%, and it goes down another 20%, you're really only down 2% on your whole portfolio, right? If you can't afford to be down 2% on your whole portfolio, then you probably shouldn't be investing in the first place, right? So my point is if you don't have any exposure, now that we're having these big drawdowns, it's probably time to start getting exposure. And I know there's people who are listening and saying, oh no, this is going to go much worse. This is going to be the big crash and we're going to have a depression for 10 years. Many people were saying that exact same thing in March and April of 2020. And for good reason. And yet, look what happened. The point is you just don't know, right? So try to prepare yourself for all scenarios. Doesn't mean you need to throw it all in right now, but I don't think people should be 100% in cash right now. I think they should have elevated positions to cash, but I don't think anybody should have 100% in cash right now. And I've used this example, and I'm not a stock picker. I don't consider myself somebody who's going to go and find the best company with the greatest growth potentials. But if you look at a company like Philip Morris, I've used them many times. I feel like they are fairly recession proof. They have great management. They've got a globally diversified business, and they pay a great dividend. That company is probably not going bankrupt. And 5 or 10 years from now, it's probably trading a lot higher than it is now. Coca-Cola is another one. It's got a global brand. It is not going to go bankrupt. It's used all over the world.
Yeah.
Right. And they pay a great dividend.
Yeah.
When you see these big blue chip dividend paying companies that are going to survive when their little upstart competitors go bankrupt, and you can buy them at a 20% discount and you're 100% in cash, then that's when you start doing stuff like that. So I think it's okay to start looking at things like that.